Hello and welcome to traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is July 17 and we're starting from euro-dollar pair with Jakub Novak as usual. Data on Germany's wholesale price index, Italy's trade balance, and the Eurozone's external trade balance had little impact on the direction of euro, keeping it trading within a range. But by afternoon, market players quickly offset the strong consumer confidence data in the US and USD, which left room for euro-dollar to resume its rise this week. The upcoming inflation report from Italy and speech by ECB President Christine Lagarde, along with the monthly report from the Bundesbank, will likely help the pair continue the growth. For long positions, buy euro when the quote reached 1.1248 and take profit at the price of 1.1296. Strong statistics from the Eurozone and Lagarde's speech will help the pair grow. However, traders should make sure that the MACD line is above zero or is starting to rise from it. Euro can also be bought after two consecutive price tests of 1.1215. But the MACD line should be in an oversold area this time, as only by that will the market reverse to 1.1248 and 1.1296. For short positions, sell euro when the quote reached 1.1215 and take profit at the price of 1.1163. Pressure will increase in the absence of bullish activity at the yearly highs. However, when selling, traders should make sure that the MACD line is below zero or is starting to drop down from it. Euro can also be sold after two consecutive price tests of 1.1248. But the MACD line should be in an overbought area this time, as only by that will the market reverse to 1.1215 and 1.1163. The next stage of our review is the next major, GBP USD, Sebastian Seliger describes. The GBP USD pair has made a new swing high at the level of 1.3141. as the bulls keep pushing higher to extend the uptrend. The next target for bulls is seen at the level of 1.3163, which is the key long-term technical resistance on the weekly timeframe chart. The old swing high will now act as a key short-term technical support located at 1.2848. The momentum is strong and positive. However, the extremely overbought market conditions were hit on the H4 daily and weekly timeframe chart. So a pullback towards the support is on the table. Only a sustained breakout below the moving average, dynamic support around 1.2693 would change the outlook to more negative. The next chapter is USD JPY. This trading plan is presented by Petar Rikimovic. USD JPY has been trading sideways this morning, and we see potential for the downside continuation since there is a lack of buying power. Due to the lack of buyers and strong short-term downside continuation, Betar sees potential for the further drop towards 137.40. Downside objective is set at the price of 137.40. MACD oscillator is showing fresh downside momentum and lack of buyers, which is good sign for TAG further downside movement. Key resistance is set at the price of 139.10. More and more by Betar, this time for gold. Gold has been trading sideways this morning, but we see potential for the further upside continuation due to the lack for sellers and upside momentum in the background. Due to the lack of sellers, breakout of the supply trend line and bullish condition in the background, Betar sees potential for the further rally towards upside references. Upside objectives are set at the price of 1970 and 1982. RSI oscillator is showing oversold condition and fresh flip up, which is good sign for further upside movement. Key support is set at the price of 1950. What about crude oil commodity asset? Arif Makmur describes. Although on the daily chart the CCI indicator of crude oil commodity asset managed to break from the lower level upwards starting from -100, 0 and 100, which indicates that the upward rally is valid, but after successfully breaking the 75.03, now CL will be withdrawn for a downward correction, first in order to gain momentum to rise above again, where the level area is 72.61, 71.52 will be the main target to aim for, and the 69.94 will be the second target. But if on the way to the target level area suddenly CL again rallied up and back past the last Ross hook level, namely at the 77.21, then this will cancel the scenario of the downward correction described earlier. And finally, here's Laurie Bailey with AUD USD pair focused. Let's have a look. The Australian dollar gives the impression that it's returning to the target range of 0.6783, 0.6798. We believe in this impression because the Marlin oscillator has turned downwards. But what will happen next? One scenario suggests a reversal towards the upper target level of 0.6940, according to the Fibonacci period by August 1st. On the daily chart, this is the line number 8, with July 29 as the date, but considering the weekends, it will be on August 1, which is when the Reserve Bank of Australia meeting is set to take the place. Another suggest is the price falling to the target level of 0.6560, also by August 1st. In this case, The likely 96.7% increase in the Federal Reserve's interest rate on July 26th will weigh on the Australian dollar. We are monitoring the price behavior within 0.6783, 67.98 as the range. On the 4-hour chart, the MACD line and July 4 peak create the intermediate support level 0.6708. Martin oscillator has approached the zero line, increasing psychological tension. That's all for today. See you online soon. Good luck.